Hey, what's up guys? Brandon Gentile here, Legacy Group Real Estate Team. We have your Macomb April 2018 real estate market update, and let's jump right into it. So we have the last 2 years. We do this year and then we do the last 2 years. That way we can show you guys a pattern of what's going on. We've been doing this now for a number of years. You can find them all on our Facebook channel. Go to our YouTube channel, the Legacy Group YouTube channel, and go check out our playlist there. It's got all the videos, all the updates for the last couple of years, and you can see the pattern of what's going on. Because if you don't believe me, you don't want to take one sample size, you don't want to take 1 month, you want to see the pattern, you want to see what's going on. But this is why we do the last couple of years. That way you guys can see in just one video the last couple of years what's going on. And right now we have a massive Macomb sellers market. Well, it's like that everywhere. Genesee, Macomb, Livingston, Oakland, you name it, sellers market right now. There's a lot of buyers, not a ton of homes for sale. A number of reasons why that is. Two of the biggest being a lot of the builders are gone. And yes, I know people say, Brandon, there are builders here. I see building going on. Yes, but the big national builders like Pulte, all those 200-300 unit subdivisions going in are no longer. People aren't, that's not happening like it was 10 years ago. If you remember, there's a lot of vacant properties sitting for years after the Great Recession, is because of those kind of properties sitting vacant, not being funded, not being bought, etc. A lot of those builders are gone. There's regional builders building one-offs, building custom homes, building nothing near what we need to sustain growth and what's going on. One of the other big reasons is because of institutional investing. After the recession, investors were looking for places to make money, and they were looking to put your money that you have in your 401k or in stocks, whatever it was, in funds, and they were looking to get a return for you. So what did they end up doing? A lot of them ended up buying a lot of single family homes, a lot of property, and they're getting great returns on them, and they still are. And if you've noticed, rental rates have skyrocketed over the last handful of years because we've got a lot of renters out there. We have about 62% right in there home ownership nationally. Before the crash, I believe we touched 70%. We might 69%, 70% nationally. So we still have a long way to go to get back to the home ownership rates that we had. It might be up towards 65, 64, 65 now. I think we went down to 61 maybe in the depth of the reception, or of the inception of the recession. And but I have to check on that. I think it's come up. I've seen stats that said 65%, but anywhere from low 60s to 65%, and we were at 68 to 70% home ownership before the crash. So just think about how many homes, how many people were owning homes and now they're not. And that's another story for another day. You could get into that and parcel that out, and we won't get into that today. But those are the stats, and the numbers don't lie. And so those are the big reasons. People are making great returns, so they're not selling their homes. So you've got a lot of people stuck in rentals, can't save money, and they're now in rentals that they otherwise wouldn't be, and they would have bought homes and sold homes, and now it's just one big vicious circle. So we're jumping right into it here. Days on market. Days on market is DOM. 55 days, 45 days, 36 days. So again, we've seen this about a 10-day drop. Average days on market each year, again, because homes are selling very quickly. It's a seller's market. There's not a lot of homes out there. So we see this continually, a trend that keeps on going. Active homes, number of active, look at this drop, 2660 all the way down to 1060. So we've had, what, 1,600 home drop in 2 years. 1,600, over half. That's almost a third, literally almost a third of the homes we had on the market 2 years ago, just 2 years ago, 2 Aprils ago. So think about that. I mean, it's just absolutely incredible. This is why buyers are struggling right now. This is why it's so hard. People do not believe me. It was one of our realtors was joking around today, actually, that people don't believe what's going on until they've lost out on 2 homes. They do not trust their realtor for whatever reason. And fortunately, we have some ways around that. We've got some cool things and different ways to win offers. And I mentioned in one of the other videos that we have a resource, how to win multiple offer situations. That's a resource that we have. So we'll put a link to that. You can get that there, free resource. But anyway, this is why people are so frustrated. And it's human nature. People don't get it. They don't learn a lot of times till they experience themselves. I know I'm that way a lot. Months of inventory. 2 months, 1 month, 1 month. This is basically a ratio showing you the speed of the market and basically kind of taking these numbers and putting it into a ratio. Months of inventory is at the rate of that homes are selling, how long would it take every last home to sell if no new homes hit the market? So right now it'll be around a month, and these numbers are rounded, but still that's about a month. A healthy market's about 4 to 7 months, probably 4 to 6 months. So you can see how fast the market is right now. And then anything above about 7 months, 8 months, 10 months, that's a buyer's market. That's when there's too many homes in the market. We had 7, 10, 15 months of inventory back in the recession in 9, 10, 11. So this is a ratio that kind of shows you and sums everything up. New homes in the market. So these are new homes coming onto the market. These are the ones that are sitting there in what's actively actual inventory. These are how many homes came onto the market this month. How many of them were new this month? And we had 25 2 years ago. Now we're down to 1,800 new homes. So again, that supply is dropping. Not as many homes are coming into the market. So which again poses a problem. Poses a problem for those droves of buyers. One of the other reasons there's a lot of buildup and traffic going on in the market is because you have a lot of people now. We have pretty much everyone over the last 2 years. This is why you see a lot of decrease also. All the foreclosures, everyone short sales foreclosures, that 7-year window that you can't borrow anything, that 7-year window is pretty much up now for a lot of the people. 2011, you had a lot of foreclosures, 08 to 2011. You still had a number after that, obviously, but you have a lot of those big foreclosures that hit. They're now, that 7-year window is up. So you're seeing a lot of people jumping back into the market, and there's not a lot out there. So when there's too much demand and not enough supply, prices go up and people get angry. So price per square foot. This again, and I say this in every video, sometimes there are numbers that are abnormalities, they're little hiccups, and sometimes because there's not enough data in a certain sector or something weird happened, or a lot of the homes happen to be in one neighborhood that month or whatever it may be. And this is one of those categories and one of those numbers that there's a little hiccup. See, we had 85 2 years ago, we got 99 now. So you think about it, probably a normal number probably would have been about $93 a square foot here. That would probably make sense. A steady increase is usually what we see. For some reason, it was $218. Don't ask me why. I don't know if it was just all $1 million homes being sold last year in Macomb County or what, but sometimes you have these, you got to take those with a grain of salt. So the other 17 numbers are showing us one thing, and you've got one number that sticks out sometimes. That happens. Don't worry about it. Sold. This is the basically the buyer stat, I call it. This a lot of times will show us kind of how many buyers are out there and what's actually going on with the buyers. These are really kind of seller stats. These are the buyers. So this kind of shows us hey, there's 1,500. Now there was about 1,250 that were sold. So again, it's dropped off a little bit, but this number usually, as we see month after month, year after year, county after county, this number doesn't change that much. It just doesn't, because the buyer pool generally stays the same. It goes up and down a little bit. You usually don't have a huge change unless you have like a recession, great recession where a lot of people fall out of the market and they're gone from the market or whatever. But this is a telling buyer statistic. So I hope that makes sense, guys. I hope this is something that helps you make decisions for you and your family. This is the Macomb April 2018 update, and I hope this helped you in some way or another. If it did, please let us know. Throw us a thumbs up or something like that. That'd be awesome. That way we know that people are getting stuff out of it. But let me know if you have questions about it. Let me know if there's other stuff that you guys are looking to learn. We take a lot of Q&A that we do, obviously, and we want to keep getting that out there to you guys. But this is the market update from Macomb. So again, use this. Oh, and one last thing, the square footage. This is a basic, common. This is. Don't use it as a gospel. As you got to get an appraiser, you got to get a market specialist, a real estate agent out there to do an appraisal on your home. This will give you an idea of, if you multiply your square footage times the price per square foot. This is county-wide, so it's a very general, broad number. Don't take it as gospel. Just use it as a simple guide to know, okay, is my home worth 200? Is it worth 400? And this will kind of let you know what ballpark you're in. Then you can start ratcheting it down later. So I hope you guys got something out of this. I appreciate your time and energy more than anything, because it truly is the most important thing we have. And we really are humbled and honored to have your attention. So we thank you. We'll talk to you soon.